My mission is simple, to make you money. I'm here to level the playing field for all investors. There's always a bull market somewhere, and I promise to help you find it. Mad Money starts now. Hey, I'm Cramer. Welcome to Mad Money. Welcome to Cramerica. Other people want to make friends? I'm just trying to make a little money. My job is not just to entertain you, but to educate and teach you. So call me at 1-800-743-CNBC or tweet me at Jim Cramer. Too hot or not too hot? That is the question. Every day we debate it. Is the economy overheated?
The house of pain.
Or just regular heated?
House of pleasure.
Was the personal income number a scorcher? Do we really need a $1 trillion infrastructure package when we already have so many job openings? Does it matter that FedEx can't find enough workers? And the president's whispering for higher wages. All of those issues were in play today as the Dow rallied another 237 points. They come easy, don't they? And the S&P gained 0.33%, while the Nasdaq traded sideways, ultimately declining 0.06%. Next week, though, we end the hot versus not debate. Yep, we're going to do a backwards game plan tonight because next Friday at 8:30 a.m. we get the Labor Department's nonfarm payroll report for June. And I got to tell you, I think this will show more people employed and some wage growth. Not enough to crush the market. But whatever the number is, you can expect the inflation hawks will come out of the woodwork. And they'll demand that the Fed do something now and do it now. Do it now. You can always find a Fed president, non-Fed president, Fed this, Fed that. You know, a guy Fed in the title, and they're going to come out and criticize Powell. I am of two minds about this, and they may not be the ones you expect. My first mind says we'll still see these generous unemployment benefits, so it's really hard to get a clear picture of who's really working for work. I mean, who's looking. I mean, that's called ghosting, by the way. I got a lot of ghosts coming to my restaurant. They're ghosting. They're not really wanting the job. I don't know. We need to see the true face of the labor market. And until those benefits go away in September, we're not. My second mind says the money managers who want the Fed to slam the brakes on the economy aren't really worried about inflation or excessive government borrowing. They say they're worried. They might even mean it. But mainly, I think they're just underinvested or short bonds. So they're getting squeezed, and they want the Fed basically to bail them out. Look, I'm a journalist. Sadly, I have no subpoena power. But if I did, I bet we'd find that many of these guys who come on TV and blast the Fed are failing to disclose that they'd make a lot of money if the Fed took their advice. These are largely the same people who wanted the stock market to have a total down week rather than a great up week. Sorry. So they try to gin up a phony sense of surprise every time we get another piece of economic data. Ooh, look how hot that is. Think about it. We've read article after article about how businesses can't find workers. When you've got help wanted signs all over the place, there's nothing shocking about rising wages, is there? Honestly, wouldn't it be shocking if wages didn't spike? That means Friday's non-farm payroll number could still be pivotal because even the coolest number can be spun as too hot, and it will be. You just need 2 or 3 billionaires to come on the air and explain how Fed Chief Jay Powell is hurting working families by allowing inflation to run rampant. If you're rich enough, people take you seriously, even when you talk about how we need to protect workers from higher wages. And I call them oligarchs these days, and that is meant as derision. Anyway, what matters here is that Jay Powell has made his position incredibly clear. While inflation is running hot, he thinks it's transitory. He refuses to raise interest rates until we have less unemployment. So Friday's jobs number would normally be anticlimactic, except that we have so many money managers who want to hype this report up as the end of the world. Not for them. Oh, no, not for them at all. But for the poor downtrodden early wage earner, the hourly wage earner. You know, that's who they care about. You know, they actually say it with a straight face. Really extraordinary in its bogosity. What else is coming up? Okay, next on Monday, we get one of the best barometers of both work and home, and that's Herman Miller. You know, they make those great Aeron chairs. I got to get an Aeron chair. I got one downtown. They're expensive. They also make expensive home furniture. Ever since COVID locked us down, this stock has been a one-way ticket up. But that ended with the last earnings report. I think Herman Miller's feeling like a pandemic play. And what we're really looking for are post-pandemic plays. Call me a tad nervous. Tuesday after the close, we hear from AeroVironment, the drone company. We used to have them on all the time. Unmanned aerial vehicles are pretty cool, but what I care about are unmanned ground vehicles. Right now, we got a real shortage of truck drivers. And by the way, AeroVironment looks like it might have some answers. I like that. Their website's really good. Wednesday is the huge earnings day of the week, and it starts with STC, Constellation Brands. I like the maker of Modelo, Corona, and Pacifico, the last being our biggest seller at my small plate restaurant, Bar San Miguel in Brooklyn. I am looking for a very big number, with only COVID potentially holding them back because they make these beers in Mexico. And Mexico is way behind us in shutting down the pandemic. I know that it's fair to say Constellation's been ahead of the problem in Mexico, but I also know that there are many workers still not able to work. And then there's General Mills. All right, so General Mills, many analysts worry it's going to get hit because of inflation. They're getting hit with all sorts of higher cost freight, boxes, crops, you name it. I'm actually looking for something else that morning. There's an acreage report from the federal government that might show a huge increase in corn, which could send the whole commodity complex tumbling. And that will help General Mills. Plus, General Mills makes Blue Buffalo dog food. It's the #1 name among dog sophisticates. NVIDIA, too, is not a sophisticate. He's getting pet chow, Purina. I like that. Purina's good. Anyway, I mean, what? Like he's going to tell us that he doesn't like the taste? Oh, I don't like that, Jim. That's not what dogs do. I know dogs. Then there's my favorite of the morning, Bed Bath & Beyond, and that's run by the terrific Mark Tritton. Bed Bath became a meme stock simply because it's heavily shorted. The buyers wanted to break them, but they couldn't do it. In the meantime, I think this company might just show itself to be a darn good retailer with real product that could make this thing a brick-and-mortar survivor. Bed Bath & Beyond could be worth owning. Hey, let's get momentous. After the close, we get results from Micron, the DRAM and flash semiconductor maker. The last time they reported, the stock peaked as though the semiconductor cycle was over. That's what everybody, no one said it, but it happened. I think it's ridiculous, and Micron has more room to run, but I hate to buck a cycle. The decline has been torture, and I'm betting the shareholders will skedaddle on any uplift. As much as I like Micron, it's still a commodity chip maker at a moment when I'd rather own proprietary chip makers like AMD, where I think that Xilinx deal is going to close, Broadcom, which just reported a terrific quarter, and NVIDIA, which two guys said is going to 900. Now, we got two real good ones Thursday. First, we hear from Roz Brewer, who left the senior executive job at Starbucks to take over the one as CEO of Walgreens. She needs to lay out a vision, hopefully for something bigger than more stores or more one-time only customers who only visit for the vaccine. I am not a fan of the stock of Walgreens. It's listless, and I think it has no real reason for being. I doubt anyone can change that downward trajectory, except for maybe Brewer and a handful of other merchants. I wish her the best, but Walgreens has been a real bow wow. Second, we've got Cramer fave McCormick. Yes, the spice company, all right? The hot sauce mustard company. For a long time, this was a sleeping machine that people started cooking at home during the pandemic. It suddenly caught fire. Oh, you know what? We're still cooking today. I mean, no one's stopped cooking. But with restaurants reopening all over the place, people are going out more and more. That's what that Darden quarter said. Huge pent-up demand. Plus, McCormick's up against some tough comparisons versus last year. All week, I've been trying to show you how to catch the easy money, McCormick's hard money. Stick to what works in and out of the home. Stick to beer, which tastes great at home or in my restaurant or any other place. The bottom line, though, next week's all about Friday's non-farm payroll report. Regardless of what the actual number is, the inflation hawks are going to come on TV. They're going to make a lot of noise about how the economy's hurting. And these oligarchs, their goal is to help the working person. That they can say it with a straight face crushes me. Don't even bother to listen to them. Mark in Illinois. Mark!
Hey, Jimmy Chill, big booyah to you from the Midwest.
All right, the Chill says hi. What's happening?
Well, earlier this year, you listed travel as a theme for investing in 2021. My stock with a 52-week high of 187 and some change and 52-week low of 75 and some change is Expedia Group. EXPE, hold, sell, or buy.
Horse! Buy! Plain and simple. No more questions? I must have talked too much about my dog. All right, next week, my dog's name's NVIDIA the second. Next week, it's all eyes on Jobs Friday. All right, that's why I started there. I did not start usual from there. Went right to the source. No matter what, the inflation hawks will say the economy's overheating and it's time to tighten because they want to help the little guy. Don't listen. Oh, man, buddy, tonight, with the S&P hitting another record high, well, you got to ask, is your portfolio in a prime position to profit? I'll be the judge of that when we play MI Diversified, which you've asked for. The Nike stock is jumping higher than Michael Jordan. I'm breaking down the company's latest earnings and why so few people caught it right. Matthew Boss sure did when he was on our show, by the way. And as a vaccinated summer kicks into high gear, sales are surging in the post-pandemic beauty boom. Who could bank on that trend? Well, I am talking to one under-the-radar player that I think may be a winner. So stay with Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.
Shepard Smith here. Thanks for watching CNBC on YouTube.